I'm John Keeber. I'm the CEO of Nevis Brands, and we're a leader in the cannabis beverage industry. I can tell you this is a better dressed crew than most of the cannabis conferences that I presented at. So not seeing any tie-dye, that's always a good sign. Nevis is involved with two really exciting products. The first is Major, the second is Happy Apple. Major is a 100 milligram 2-ounce shot. It's been in the market for about 5 years. And this product tastes amazing. It sells about 100,000 units per month. And we do this across 9 states, growing to 12 states very shortly. So Major is really what drives our business. It's what keeps the doors not just open, but thriving, derives a lot of cash flow for the business, allows us to allocate capital to new and exciting businesses. But towards the second half of this presentation, I want to talk about Happy Apple. Happy Apple provides a lot of room for growth. This is a really exciting new market. For those of you not familiar with the federal dynamic in the US, hemp-derived THC can be transported across state lines. So that allows us to produce in one location, ship it to many, and ship in some really, what I would call new channels. You see a picture here of us in a supermarket. Unprecedented, you didn't see this a year ago, and that's because of the ever-changing landscape of US cannabis. So we'll talk about Major first, because it's historically has been what's driven our company and made us successful, and we'll talk about Happy Apple and hemp-derived market towards the last half of the presentation. But just to give a snapshot of our company, Major's been around, as I mentioned, for about 5 years. We've been public for about 2 years. We generate around $2 million a year Canadian in royalty revenue. So this is high margin revenue. We partner with other leading companies in exciting states like Missouri, New Jersey, Washington, Oregon, Colorado. Some of them are very competitive markets. Some of them are high growth markets. Major is typically the number 1 or number 2 beverage in that market. So it's a very high margin business. We essentially have our partners do all the selling, all the distribution, all the production. They remit to us a royalty of around $1 or $1.25 per unit. Really our only costs on that are some packaging. So it allows us to grow really quickly, low capex, low investment. We find the highest quality partner and we let them take off. We'll talk about this more in a second. The hemp market is a new market for us. We've only been active there for about 4 months. It's not really reflected on any of our financials so far. So what you see with this $2 million in revenue so far, 95% of that is Major. And we trade at a $2 million market cap and we're EBITDA positive. So I think we're actually probably the smallest market cap company of anyone presenting here. We're proud of that. We think it represents a great opportunity for investors like yourselves. Okay, just to dive into Major a little bit more. Major, we're in 9 states. These 5 states, Washington, New Jersey, Missouri, Colorado, and Oregon, drive most of our revenue, especially Washington. Washington is our legacy market. It's where Major was launched. It's not from a shortage of competition. We've seen a lot of people come at us in Washington with different flavors, different formats. Major has the staying power. Why? Because it tastes amazing. We have 11 different flavors. It hits quickly. For those of you who consume, a lot of people have questions about edibles. They're not sure if it's going to happen in an hour or 2 hours, or should I take more? They know when they take Major, it's going to hit in 15 minutes. And again, it's a little bit crazy. Half of our consumers report that they'll consume that 100 milligram beverage all at once. It's a little bit crazy, but that's the market in the US. It's a high dose market. It's a heavy user market. So Washington, we've been around for a while. New Jersey, we just launched a year ago. It's already our number 2 market. We see New Jersey growing, maybe not to the Washington level, but we could see that potentially doubling over the next 2 years. Missouri, Colorado, Oregon, also growing, albeit at a slightly lower rate. But our newer states, New Mexico, Arizona, Ohio, coming online before the end of the year. Those are great markets. We have great partners. And we see those other 5 contributing $300,000 this year, but moreover in 2026, adding another $500,000 in royalty revenue. So even without Happy Apple, we see Nevis growing 20-25% in 2026, and we also see our EBITDA growing commensurate with that. Okay, shifting gears to the hemp THC beverage market. Again, just to delineate for people who aren't familiar with it. There's the dispensary market. That's where Major's sold, highly regulated. We need a separate partner in each state to produce that product. Hemp THC You can produce this in one spot. We actually produce Happy Apple in Ohio, and that gets shipped to all of our various distributors, all of our various stores that carry Happy Apple. So this market was a little bit dicey, for lack of a better word. It was a gray area. A lot of us were certain that the feds were going to shut it down. We thought, this is nuts. People are selling THC online. How long can this last? It's fair to admit that we were not late to the market, but we weren't an early adopter. We were concerned about the legality of it. But we did see some people doing some serious business. And some of these examples here are Breeze, Cycling Frog. Breeze is very public in what they've done. They're doing $60 million a year off of 3 hemp THC beverages. Half of that $60 million is sold online. So online is a great channel for us. It's one that we're adopting. I'll talk about that in just a second. But this market is real. This market is growing quickly, and we're really happy to have a product that's in market and taking a piece of that. So just a peek at the hemp THC market. Again, you can produce in one spot, ship it to many. You see Happy Apple already in these 5 states. Certainly the Carolinas are our most important state. That's where we actually already have some supermarket adoption. Wisconsin, Ohio, those are new states for us. Those are coming online and will probably reflect some in Q4. Texas was a great state. They went through some regulatory challenges. The governor almost banned hemp, THC, then vetoed the ban at the last minute, and now it's legal again. It's coming back on stream. So there's a couple states, those ones, Washington, Idaho, et cetera, where they actually ban hemp THC because they're trying to protect the tax base that the dispensary market provides. But other than that, there is so much opportunity in the hemp THC market, and we're certainly taking advantage of it. So hemp THC is sold in 3 different ways. Well, it's sold in multiple ways, but the 3 main ones for us are in-store. Typically, we'll have a display like this. Often it's in the produce aisle or near natural products. Sometimes it's next to beer. It really depends on the type of store. But these displays are really important for us. We actually already have about 30 of these displays already installed. Sometimes we're just on shelf. But these displays are powerful for both branding and a ease of purchase. Second picture you see here is on premise. Happy Apple's actually sold in bars. We got into our first bars in North Carolina and South Carolina. If you look at a reader board where it says like alcohol beverage volume, 4%, 8%, you'll see THC drinks saying 5 milligrams. It's a crazy new market, and we're capitalizing on it. The third one is online sales. Online sales, as I mentioned, with Breeze, doing $30 million a year. We started our online sales 3 months ago, starting to see some exciting results. So I want to talk about the 3 catalysts for Nevis. This $2 million, $2.5 million that we draw from Major. Those revenues can change pretty dramatically as we add new stores for Happy Apple. So right now we're in month 4, where we have about 50 to 100 stores. This doesn't include new distributors we've just signed on. It doesn't really even include our existing distributors getting full distribution of Happy Apple. So when we look at each distributor, some of them have 2,000 stores in their portfolio. Getting to 500 stores between the 4 existing distributors that we have, very achievable for us. Massive driver of revenue. And the thing I point out for Happy Apple is this isn't a royalty model for us. We're actually collecting the top line revenue from the sale of that product. So in the case of Major, we'll collect $1, $1.25. In the case of Happy Apple, we'll collect around $2 to $2.25 per unit. We've already done we did an initial production run of 15,000 units. We just did a second production run of 40,000 units, and we're allocating those quickly here in Q4. So I think the biggest catalyst, again, for Nevis and Happy Apple is getting more stores for Happy Apple. That's really what's going to drive our top line revenue and also our EBITDA. The second one, as I mentioned with, again, Breeze, but also others, is what we're seeing in the online sales world. Now, if you'd asked me if we're going to be able to sell our products online 2 years ago in this highly regulated space, I'd tell you you're crazy. As it happens right now, this is a massive channel for us. We've gone from 3 months ago launching our online store doing 1 to 2 orders per week. Right now we'll do between 10 and 15 orders per day. We see that growing to potentially 20 or 30 orders per day within the next 30 to 60 days. And this is all because of an amazing agency. I'd love to say it's us, internally management. We found an amazing agency that actually has launched some other brands knows how to navigate meta, knows how to navigate some of the shadow banning that happens with THC. They found ways to get around that, and we're starting to see this return on ad spend. So ROAS, for some of you who may know this term, if you spend $1, what multiple of that dollar do you get back? To date, we've been getting between 50 cents, 80 cents. We've crested to 1-to-1 a couple times. Once this gets to 2-to-1 or 3-to-1, I'm not gonna say it's this easy, but it can become just a math equation of, well, let's spend 100,000 to get 300,000 in sales per month. It can scale like that once you find the right pockets, once we know how to deploy that ad spend. So getting our online sales is a massive catalyst for our company, and I'm excited to see what happens over the next 3 to 6 months. And this is just a peek at some of the ads that we'll run. We'll tend to emphasize the messaging on no hangover, it being an alcohol replacement. Most of you probably know alcohol consumption's gone down pretty dramatically, 10 to 20%. For the first time, we actually have the Wine and Spirits Wholesale Association behind hemp THC lobbying for us, which is really the segue into the final catalyst. And this is my least favorite one because it's not something we can control. Someone made the joke that we might become the first dictatorship to legalize cannabis, but I don't know. Whatever you think about Trump, but I'm not sure where the Trump administration stands on cannabis, but the most important thing you see is movement. We're seeing much more noise. We're seeing much more challenges to law. We're seeing progress. It's not a straight line, but the number one thing that could happen for the cannabis industry is moving cannabis from Schedule 1 to Schedule 3. That allows for a lot more investment, a lot more deregulation. Does it change the demand equation? Not really, but it changed the investor appetite for investing in pot stocks. And every time you see some movement with the regulation and the administration, you do see cannabis stocks move. So it's something to keep an eye on. We don't lose sleep over it. We don't think about it. We have enough to be excited about within the first 2 catalysts I talked about, but that third catalyst is one to keep an eye on. So the last couple slides, I'll talk about our financial results so far. Over the last 2 quarters and the quarters before that, pretty stable around 400,000, 420,000 Canadian. We'll continue to grow just based on major alone. But factoring in Happy Apple, some of those results we're already seeing. We do see a strong Q3. We see an even better Q4. And this isn't business that we're planning on doing, planning on executing. This is business that is happening right now. And we're seeing this dramatic growth within Nevis as we speak. So if nothing else, we do see our year end is November 30th. We do see growing our revenues by over 25% compared to 2024. But looking beyond 2025, again, some pretty exciting things that happen. So our revenues, again, with major alone, we see going to $2.5 million. We project adding another 1.1 million from Happy Apple. That equates to roughly 50,000 units per month. Right now, we're selling between 20 and 30,000 units per month. Again, this doesn't factor in all the new stores, all the online sales that we're planning on. So that jump from 2 to 3.6, we see that on the immediate horizon, growing to 10. Maybe that's more of a stretch to project. But again, when we look at store counts, when we look at the appetite for this product, we look at our ability to get online sales going, we see it as achievable. 2028, I'm gonna say that's a very forward-looking statement. We'll see if we can keep on that trajectory. But 2026 and 2027, we feel pretty strongly about. So I'll leave you maybe just with 2 thoughts. As investors, you look at any opportunity, I think, with sort of 2 things in mind. Margin of safety is usually the first. Am I gonna lose all my money on this one? We've shown consistent revenues. We've shown fairly consistent EBITDA 2 of the last 4 quarters. Really 3 of the last 4 if it weren't for the US dollar impairing some of our assets. Strong margin of safety, again, at a $2 million market cap. But we do have these catalysts that can show pretty dramatic growth, almost doubling revenues in 2026. I think when the market starts to see some of the sequential growth quarter over quarter, year over year, we'll start to see hopefully some sort of premium baked in to our EBITDA and our multiple. That's it. I thank you for your time.